This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're gonna have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Monday, September 8th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down 1 3/4 at 4.16 1/4. November soybeans are up 1 1/4 at 10.28 1/4. And December Chicago wheat was up 2 1/4 at 5.21 1/2. No export sales announcements here this morning, so we'll jump right in. I think, guys, everybody's got their eye. We've on the USDA report this Friday. I know we'll start seeing more and more private estimates trickle in here as the week goes on. And then we were talking a little bit before the show, but looks like some heat starts creeping back in here for the East, towards the end of the week, and it's still dry. So I guess with that, Justin, maybe a few thoughts, what's on your mind this morning, and then we'll throw around the room.
Yeah, Dan. Obviously we had kind of broken here, just looking at soybeans, kind of back to all those moving averages that we talked about a lot, that we've traded through several times. They're all still in a super tight range. We had some kind of light frosts, cold temperatures, in the Northwest, Dakotas, Minnesota, Nebraska. Probably not killing frost for most of the areas. Looks like some areas probably got clipped. But still a lot of, crops that are pretty immature. So I think that's probably not, the best recipe to finish those crops off. And then you've got the Eastern Belt, which has been extremely dry for the past 30 days. And it looks like it's going to finish off with, dry, now hot, mid 80s for 10 or so days. And so I think that'll kind of finish off that crop. So I don't think it's been a great finish by any stretch of the imagination. It's just, I think we're all trying to figure out what's the starting point. I talked about before the show, it's hard because your barometer's the USDA report, right? So kind of coming in to this year, we've never seen a national yield over 180. And then we, end up planting near record acres, and government puts down a 180, almost 189. So naturally you kind of gravitate towards that number and trying to figure out a deviation from there, which I think is really tough, at least for me. So, when you're say like, you're losing yield in some areas, it looks like, from what starting point? I think there's plenty of smart people on both sides of that. I think this will be in my mind, a good history lesson where we end up this year. So I'm trying to be open-minded. Just looking at, the areas that we know, I think yields are in Illinois certainly off a decent amount from last year, but, a lot of the good analysts that have so high national yield do have, the Eastern Belt down. So I think it's impossible to know. There's so many acres to have a really good handle on what the national yield is until we start getting there and get really good yield data back. So I think beans have pretty poor finish. I think we're still struggling with all the things we've been talking about here for feels like forever. Unknown China, unknown yield. So we're just kind of stuck. Makes sense why we're in these moving averages. I do think if we could get past, get some combines rolling. I personally think we're getting close to where we've traded a lot of the really bearish stuff in soybeans, but who knows? It could always get worse, I guess. We'll see.
Sure. You got another week or so in Northern Illinois, or guys start maybe by the end of the week, you think?
I think guys will be going this week.
This week?
In some areas. Yeah. I mean, there's, unfortunately, it's probably the worst crops because there's, you can see now the fields that weren't really applied with fungicide, died early. So you've got some fields that are still pretty green and some that have looked dead here for a while. So I think there's going to be guys going this week.
No, very good. Dustin, what's on your mind?
Yeah, obviously still a lot to figure out yield wise, but I would say the dollar index is still well off of its long term moving averages. Gold reaching all new time highs. You have this this kind of like just undertone of support from outside markets. I feel like that we don't want to forget. As we're starting to see markets rise a bit, we have to remember that we're not playing in the same currency that we were the last time we were at these prices. Talking 5 years ago, we've printed so many more dollars, and that's starting to show up in asset prices. And we wonder why it's so hard to make money for row crop growers in the rent district for central ground at these prices. It's that costs reflect that, the output is not. And I still think there's a big component for the recency bias of competing with Brazil all of last year, where they had a 20% decline in their currency. They were able to compete in part because of that. I do think going forward, though, we still have to keep an open mind where things could go. As this river level starts to drop, I think Memphis is forecast to be -7 feet here the next couple of weeks. You may find the front end still is extremely weak because we're starting to get concerned about increased transportation costs, heavy harvest, that harvest pressure that would be at the front end of the market. I'd be curious to see what spreads do this year. This is a very unique year for, I think, corn spreads in particular, because we had so many corn acres this year. We had a lot of rain, and then the forecast is for extremely high cost production into 2026. And those acres should be pointed back toward beans just out of a natural rotation, in my opinion. So if we're talking, decent sized carryout, just because we have too many acres, low river levels, and a high cost production for next year, the spreads from this year to next year could get very interesting. So I think that's the main thing I'm watching as we go into the next month, is just what that gut slot harvest pressure does to the front end of the market and the spreads in particular.
Ben, what are your thoughts?
Buyers in corn got brake checked on Friday. Made a new high for the recent move. Settled lower. Made new lows on the day after that took place. I think it's interesting. We're at a point of really indecision here because there's so much yield uncertainty. And on the week, we were unchanged. So, anyone who's a candlestick person would call that a doji. It's a point of indecision. Hopefully we get some, a little guidance this week on whether we're declining in yield or the USDA sees it is still really good. I think the last few weeks of weather have been poor. The next few weeks of weather don't look to get any better. At these price levels, it doesn't seem real interesting to me at 415, 416. A little more interesting at 434 there and above. And certainly if we head back towards our lows, I think that has interest. But chop, we still planted a ton of acres. Without some significant shift from the USDA, I think holding water would be good right now at this time of the year. But certainly you cannot turn a blind eye to the fact that this has been an incredibly poor finish, and now we're going to get some heat in the next 10 days that's probably not seen as beneficial in most places.
Go ahead, Justin.
No, I just, kind of adding to that, I think it's going to be, again, we talked about this last week, but it's going to be really interesting to see how many of these bushels can find a home. I think both from, markets trying to incentivize it. I think it's probably going to, I could see the spreads getting wider than we think, especially if we do hold water flat price wise. The lower we go flat price, I think the better chance of spreads getting narrow. And that's not, Nostradamus talk by any means. That's kind of happens a lot, but I think if we were to have a rally, you could see spreads get super wide, especially if it's, you start getting, managed money now is what, 3 or 4 weeks they've been covering shorts, adding to longs in corn. if some of these outside markets do, make other asset classes like grains look extremely cheap, and you attract buyers, at the same time some of these other things are happening with a really big crop, you could see some really wide spreads for sure, especially with an interest rate environment that is relatively new still. So, and I do agree with Dustin. I think, okay, we're going to be going on year 3, arguably 4 of super high cost of production. What happens there? Also, you have new crop corn and beans really with PLC prices that aren't too far below here. One of the kind of battles I have in my head, I'm kind of going on a different subject here, but it's going to be interesting to see what happens with new crop acres. With some of these subsidy levels getting so high, 80% plus for some of these really premium insurance products, does that artificially push more acres towards corn versus beans? I think we maybe saw that this year, to be honest. I think 97 may have been really pushed along by some of these bigger crop insurance subsidies, and growers leaning on that because they had a more call it favorable or reliable APH on corn. So I think maybe unintended consequences too. So that's kind of a new factor that I don't know how to really figure in yet.
Oh, very good. Well, let's move quickly here over to livestock this morning. Ryland, we broke a 10-week streak of finishing higher, and pork cutout stealing the show for hogs. So why don't you give us some ideas here to start the week?
Yeah, so a little bit of a cautious environment, I think, going into this week. We had beef prices really kind of trail off at the end there, with choice down like 345, select down 258. And the cash market just mixed, kind of steady firm in the south and a little bit weaker up north. So, I think everybody's just going to probably be backing off a little bit. Just considering this week, I think more would expect box beef prices to still continue to fall. So there's going to be a lot of emphasis on that right now. Nobody really expects any cash trade to pick up early at this point, but obviously, we're seeing managed money still adding to their longs right now. They bought 4,000 the previous week, but still reducing in the feeder cattle. So I think that's kind of an interesting sign right now, especially just with the kind of narrative with the Mexican border being closed to feeder cattle imports into the U.S. We're seeing the managed money finally start to cover, maybe take some profits. It doesn't feel like we're in a situation where they're probably going to build a short yet until we actually get some guidance on that. So I think there's maybe just a little bit of a sigh of relief that everything's holding up pretty well, all things considered, but we are in that kind of danger zone as far as price action, coming into the fall. So everybody's going to be, I think, looking at carcass cutout going into this week. On the hog side of things, just a new high for the move. I mean, we're knocking on the door of contract highs again. I think naturally you run into some hedge pressure here. Carcass is holding up really well. We were up 255 on Friday here at 115.87 in cash. Definitely on the lower side, so we're starting to see that basis start to narrow quite a bit between October and cash. So I think we're trying to find out what's normal here, but obviously the futures have kind of made their move. Managed money dogpiling back in, adding 9,000 contracts. So we know that the specs really want to stay long here, probably on the lower production figures. So overall, we're going to be kind of keeping an eye on carcass for overall direction, but wouldn't be surprised to see some hedge pressure here going into this week.
Very good. Appreciate the update there. We will let everybody know. We've got 2 commentaries we put out afternoon, and then certainly the war room in the morning. So anybody has any questions or anything, please don't hesitate to reach out. One thing to note: we will have weekly crop conditions out at 3:00 Central. We'll take a look at those here and then visit about those in the war room tomorrow morning. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.